Hey everyone, welcome back to Alpha Insights. I'm Niva, and we're glad you're here.
And I'm Juniper. Quick note before we jump in. Markets are closed today. It's Saturday, and the last U.S. trading day was Friday, March 6th. And hey, if you have questions while you're listening, drop them at stockalpha.ai.
All right, big theme to kick off. State-level wins for cannabis policy this week, mixed with clear market red flags. So the real question here is how those policy wins actually translate into revenue for operators.
Exactly. On the policy side, you had a handful of practical moves. Colorado cleared the way for terminally ill patients to use medical cannabis inside hospitals. Virginia's Senate approved a resentencing pathway for prior marijuana convictions by a vote of 21 to 19. And Maryland's Senate moved to protect firefighters and rescue workers who use medical cannabis off-duty in a 33 to 11 vote.
And West Virginia's House voted 79 to 12 to redirect unspent medical cannabis tax money into specific programs, which is kind of a sign that those programs are maturing and lawmakers are thinking about budget mechanics.
Right. And over in South Dakota, a committee blocked a proposal to dissolve the state's oversight board by a 4 to 3 vote. So, regulatory continuity there, which investors like because it reduces the headline risk of sudden shutdowns.
Those policy moves add up to less stigma and a slowly broadening addressable market. But the timing matters. Implementation is where the rubber meets the road.
Exactly. Law changes are one thing, rules and hospital policies are another. Will hospitals promptly adopt the Colorado change, or will they add carve-outs? Will Virginia's governor sign, and will resentencing be quick and clean? Those follow-ups determine when companies actually see incremental sales.
Switching to company signals. Cresco Labs reported results for the fourth quarter of 2025, revenue of $162 million, and they said margins improve sequentially, even though revenue keeps shrinking. Honestly, I was a bit surprised by this one.
Yeah, that's a good point. Improving margins with a shrinking top line tells you they're tightening operations, maybe cutting costs or getting better at pricing and product mix. But it also highlights that regulatory tailwinds don't automatically turn into top-line growth for every multi-state operator.
And then there's Florida, reports calling it a frightening medical market. Translation: pricing pressure, possible oversupply, regulatory friction. If you have heavy Florida exposure, that can really compress margins.
Which is exactly why investors need to be selective. Two companies in the same sector can have wildly different outcomes depending on which states they operate in and how exposed they are to markets like Florida.
Quick aside, on the product side, consumer innovation continues. There are premium product drops combining rosin, diamonds, hash, and high-end formats, which shows demand sophistication on the retail level. People are still spending on novelty.
Yep, that kind of product innovation helps margins for retailers and brands that can charge a premium. But it's a small piece of a much larger puzzle about scale and state-by-state fundamentals.
Okay, practical checklist for listeners. What to watch next. First, rulemaking after Colorado's hospital vote. Watch whether hospitals adopt clear allowance frameworks or add carve-outs.
Second, the governor in Virginia and the timing of implementation for resentencing. Third, Florida market data, patient counts, pricing trends, and license enforcement. If Florida weakness deepens, that's a real valuation hit for exposed operators.
Fourth, corporate earnings and guidance. Look for cost controls, capital allocation, and margin commentary from the big public names like Cresco Labs and other major listed players. And finally, watch flows into broad cannabis ETFs and funds as a sentiment signal.
So what's the short answer for portfolio decisions? If you're long-term and believe in destigmatization, policy progress is constructive. But if your time horizon is shorter, you need to explicitly account for implementation risk and regional market stress, especially Florida exposure.
I mean, when you look at the data, it all comes down to execution. Policy opens doors. Companies have to walk through them.
Short reactions. Good policy wins. Company execution varies. Florida is a wild card.
To wrap up, key takeaways together.
1. State policy moves in Colorado, Virginia, Maryland, West Virginia, and South Dakota are meaningful and reduce long-term stigma and barriers.
2. Company results like Cresco's $162 million in fourth quarter revenue show margin progress, but remind us top-line growth is not guaranteed.
3. Florida's market stress is the main near-term risk. Watch regional data and company disclosures closely.
Great! Got questions? We'd love to hear from you. Head over to stockalpha.ai, where you can ask us anything and we'll answer live. And while you're there, check out more market content.
Thanks for listening. We'll be back with more Alpha Insights after the markets reopen on Monday. Take care.